This catalyst will push Bitcoin past $500,000. Check this out. Now, big news came out that's going to be a massive catalyst. It's like basically like pouring gasoline on the fire, and it's going to send Bitcoin shooting up past $500,000 per coin, about a 10x return from here. Now, while most stock traders or Wall Street chase single-digit returns, the best investors in the world are always on the lookout for what we call asymmetric opportunities. Now, this means that they have way more upside than downside. So instead of betting 100% of your money on a stock that can go up 10%, which is a 10% upside with a 100% downside, the best investors look for the opposite, a 10x upside with a 1x downside. And the way these investors find these asymmetric opportunities is by having asymmetric information, which is, of course, information that most people don't have yet or don't understand. And this is what we have today. So let's go. All right, now real quick before we dig in, if you're new to the channel, my name is Mark Moss, and I make these videos because I want to change the way you think about money, because almost everything you've learned is wrong. And I know it's hard to navigate these markets correctly, and it's scary to think what happens if you get this wrong. It's frustrating when you don't understand. So I take these complex subjects that affect your money, your family, and your future, and I make them easy to understand and actionable so you can be educated and knowledgeable about what's happening and coming in the future. Now, if you like these topics and want to help me get them to more people, please just take one quick second, do me a favor, and just click on that like button so the algorithm sends this video out to more people. Hit that subscribe button, the bell notification, so you know when I put new videos out. All right, now today I'm going to share the asymmetric information you need to get the asymmetric upside. Okay, so today I'm going to be sharing the asymmetric information you need so that you can get the asymmetric upside. Now, I'm going to start with telling you about something called the Lindsay Effect. All right, we're going to start here. Now, some people don't understand this, but it's an important piece of what we have here. All right, and this is one reason that it holds people away from this Lindsay Effect. You'll explain. So what the Lindsay Effect is that life expectancy is proportional to the age. So what does that mean? So gold's been money for 5,000 years. Its age, the life expectancy, it will, because it's been around for 5,000 years, it will always be around, right? And its age also, well, Bitcoin's new. It's only been around for 10 years. And so it will probably die soon, right? You understand the Lindsay Effect. The longevity implies a resistance to change. Some may call this normalcy bias. And so whatever is normal, whatever has been normal, will always continue being normal. And these are problems that humans have, and this is what makes humans horrible investors, emotions like these. Now, this typically only applies to non-perishable items, so of course you can't say that about a banana or an apple or something like that. And anyway, back to my point, right? Gold's been money for 5,000 years, so it's always going to be money. And it kind of works like this, but the thing is about the Lindsay Effect is that the life expectancy is proportional to age. So what does that mean? Every year that Bitcoin survives, the more likely it is to survive. Every time Bitcoin comes back from a crash, the more likely it is to survive. That's basically what the Lindsay Effect tells us. All right, now, the other thing that people need to understand to get this asymmetric edge, this is the edge you need to be successful. You have to understand how technological revolution cycles work, all right? Cycles repeat. It's like the same process happening over and over and over again, repeatable patterns. And if you can understand these patterns, then you can start to understand what to expect in the future. All right, so we have these cycles that pass. All right, now the first thing is about a cycle is that we need infrastructure. All right, now what do I mean by that? Well, let's take cars as an example. Cars being an example, there was a brand new technological revolution about 100 years ago, a little over 100 years ago. Now, the cars came out and Henry Ford created the assembly line. That was a new invention. And all of a sudden, cars were the hottest thing ever. And everybody wanted to jump into cars, investors and speculators. And all of a sudden, there was all these car manufacturers. Next thing, there was over 100 car manufacturers. The problem is that the market didn't support it. There wasn't enough people to buy the cars. And part of the reason why there wasn't enough people to buy the cars is because there was no infrastructure. What do I mean by that? There was cars, but there was no roads to drive them on. There was no gas stations to fill them up. There was no infrastructure to support that, all right? So that's like cars need roads, all right? And so this kind of illustrates actually, I have a couple of pictures just to show you what I'm talking about. So here is the assembly line, the first car. So that was a brand new technology at the time. And of course, what's interesting is actually more than 100. We can see here that the automobile industry had growing pains, as I said, right? And the number of active automobile manufacturers dropped from actually 253 auto manufacturers to only 44 in 2009, and then eventually just the big three, Ford, GM, and Chrysler. So that's the way technology goes. Now, you might have recognized the same pattern playing out in the internet. In the late 90s, the internet was the hottest thing in the world. It was going to solve every problem in the world. And at the late 90s, the famous ones were like webvan.com, pets.com, etc. Now, those weren't wrong ideas. Today, most people buy all their pet stuff online. The problem was in 1998, the market couldn't support that. First of all, in 1998, less than like single digits, like 5% of people had ever purchased anything online. Second of all, the infrastructure wasn't there. The internet was too slow, right? We didn't have e-commerce back then, and so it couldn't support it, so we saw the same thing. Now, this kind of shows the life cycle of adoption, and you want to understand this, all right? So you have the eruption. This is the Big Bang. This is the new idea. The internet's here. And then you kind of have this frenzy right here. You have the webvan.com, the pets.com, you have the 250 automobile manufacturers that can't support it. And you have to get through this area right here. It's called the chasm, the turning point. And then we get into this, all right? Now I'm gonna show you how this all makes sense, and we'll tie it back into Bitcoin in a minute. But you have to understand that there's repeatable growth patterns to technology. We see it over and over. You can trace this back hundreds of years. Now, Bitcoin, and all technology follows what's known as an S-curve. Now, S-curves are used in all different types of economics. I even used S-curves when trying to trace what would happen with the pandemic and some numbers like that. So we can always look at the adoption curve. Now, Bitcoin has been growing historically at a 200% annual compound growth rate. All right, now we can see Bitcoin here, 200% compared to gold, 1.9, compared to the S&P 500, 11%, NASDAQ. Tesla's done great, 63%. Amazon's done pretty good, 35%. Obviously, nothing in compared to Bitcoin. And then if we want to compare it against other assets over, now this is, instead of looking at 10 years, maybe I'm cherry picking, so let's look at it year by year by year, and of course we can see Bitcoin, gold, and stocks, and it's just continued to be outperforming. But the big thing we want to think about is this S-curve, all right? So this really helps us understand where it's going. We have to understand, remember how the cycles break out. First, you kind of have that initial frenzy, and then you want to get past the chasm, and then things can really start taking off. All right, remember, we need infrastructure. All right, I'm going to come back to that in a second. All right, now Bitcoin is hitting its stride somewhere between that initial eruption and trying to get past the chasm, and it's trying to get to what we call the big time, or what I'm calling the Bitcoin, the big time anyway. So we've seen that S&P and Fortune 500 companies have already started to adopt this. I think Michael Saylor with MicroStrategy was the first S&P 500 company to adopt Bitcoin as its treasury reserve asset. They've been adding treasury reserves. MicroStrategy, we've seen Tesla, 1.5 billion. We've seen Square, ARK Invest have all started to take some of their treasury reserves. So these companies have hundreds of millions of dollars or billions of dollars in some cases of what they call their treasury reserve, their savings account. And they're starting to they have to invest that money. It's so much money they can't afford to leave it in cash. And so they've been putting some of it in Bitcoin. Now, we've seen a bunch of companies saying they're putting between 3 to 5% of their allocations. That's starting to trickle in right now. Of course, MicroStrategy went all in and they put their entire treasury reserve in, but about allocations of 3 to 5% have been trickling in. We can see this over and over and over. Here's Shark Tank star, Mr. Kevin O'Leary, Mr. Wonderful. He hated Bitcoin. He called it garbage, but now he says that it makes up 3% of his portfolio. He said that of the companies he advises, he recommends that they take between a 3 to 5% portfolio allocation towards Bitcoin, so 3 to 5%. We can see Cathie Wood from ARK, who's one of the top ladies on Wall Street, runs some of the best technology funds that are out there. Disruption investor Cathie Wood. She says they've been modeling what it would look like if companies were to do this. If more companies were to use Bitcoin as an alternative to cash on their balance sheet. So they've been running the models. And she says that they've been expecting institutions to start moving more of their treasury reserve into Bitcoin. And she said that if all the S&P 500 companies were to allocate 1%, just 1% of their cash to Bitcoin, or if they moved 10% of their cash to Bitcoin. If they moved 10% of their cash, just the S&P 500, moved 10% of their cash, which is not a lot, to Bitcoin, it would see it bring it up to over $400,000. And they kind of worked out a couple charts, and you can see right here. So here's at a 10% allocation, which of course we're at that level right now at about 50,000. I'm sorry, at a 1% allocation at about 50,000, and a 10% allocation over $400,000. So that's what would happen, and we're already starting to see some of this start to trickle in, but it's been kind of slow. Now, the reason why it's been slow is back to the infrastructure. Just like the automobile boom, just like the internet boom, it's a great technology. Early adopters start to use it, but we can't get the majority in it because of infrastructure, right? So imagine if we had a town and we built it out in the middle of nowhere, but it had no electricity, it had no sewage, it had no roads leading to the town. You couldn't have a lot of adoption of that town, right? So we need more access. We need to be able to get more people into the town, more people into Bitcoin. It needs to be easier to use. Instead of having to bushwhack through the middle of nowhere, you need a freeway that goes there. It needs to be easier to use. We also need regulations and mandates to change. What do I mean by that? Well, a lot of funds, hedge funds, institutional funds, in their mandates, they're not even allowed to buy it. That's one of them. We also need regulations to change things like that. We also need to change custody. So it's one thing for me or you to hold Bitcoin and I have it in my hardware wallet on my desk. It's a whole different thing when it's a publicly traded company. Who's going to hold the private key? In a lot of institutions, they're not even allowed to custody their own assets. They need institutional grade custody solutions, so we need that. We also need OTC desks. We need the liquidity. We need these big institutional firms to trade hundreds of billions of dollars to be able to get in and out very quickly. If you guys watched the news, you saw Tesla had bought $1.5 billion worth. They recently sold a little bit of it, and they said they did that to test the liquidity of the market. But the good news is that all of this is changing very, very fast. And as a matter of fact, a major catalyst just happened. And this is a big one. This is the asymmetric information you need, a major catalyst, and that is for the infrastructure. I'm talking about a super highway was just built coming right into the town. What am I talking about? So NYDIG, they just announced support to bring the super highway right into the town. What do I mean by that? Well, a lot of people watching this video might be wondering, how do I buy Bitcoin? How do I invest into Bitcoin? It can still be pretty tricky. So you have to go set up a new account. There's different people that you can do that with. You have to go through the KYC. You have to prove your documentation. You have to upload your pictures. And then you have to try to connect your account. You have to wire in money, and then you buy it, and then where do you store it? And there's all these unknowns. And that keeps people from taking adoption, right? They can get there if they can traverse over the land and through the rivers and lakes. But what about a highway that just takes them there? And that's exactly what we're talking about. So NYDIG supports 300 banks and 300 million customers. Now, when I say they support them, these banks, they offer financial services. Of course, those banks don't actually fulfill all those financial services, so they use a back office to do that. And NYDIG supports these 300 banks with financial services. And now they are going to provide these banks the ability to sell Bitcoin and custody Bitcoin for their customers. So that means right now, these 300 million customers already have a bank. JP Morgan, Chase, Wells Fargo, Bank of America, whatever. And now inside their bank, they could just click buy Bitcoin. They could just store it right there. They could just transfer it. They could say, hold this much in US dollars, hold this much in Bitcoin, right from their bank account. And as opposed to having to traverse over the land and navigate across rivers and streams, they can do it right from in their account. And this is not just about retail, all right? This is businesses, this is institutions. So now a business, maybe a publicly traded business, a business that has multiple owners, that has money in the bank, can decide to keep some of that money into Bitcoin without all the hassle of who's holding the private key and what if somebody runs off with it or dies or some of that stuff. Now this is really big news. And basically, like I said, it's coming to hundreds of US banks this year. Now, don't expect to go tomorrow and open up your bank and expect to buy it. It's coming this year, all right? And so this is our opportunity to have asymmetric information to have that edge. For the first time, customers of US banks will soon be able to buy, hold, and sell Bitcoin through their existing bank accounts. It's that big. The reason, I love this part right here, demand, the demand of the market. The reason banks are asking for Bitcoin is because they can see their customers are withdrawing their money and sending it out to cryptocurrency exchanges like Coinbase and other crypto exchanges. The banks are like, shoot, everyone's pulling their money out of the banks and they're going over here. If we don't offer this, we're going to be obsolete. We already have the customers. Why don't we just offer it directly to our customers? After rolling out this, it says other services, including debit cards and rewards paid in Bitcoin. So now NYDIG plans to provide all these other services right through your existing bank account. Reward cards paid in Bitcoin, a new type of bank accounts that are, check this out, FDIC insured, but pay interest in Bitcoin. And so this also, not only does it make it easy to use, not only does it bring a super highway right to town, it brings legitimacy. A lot of the people watching this video might still be thinking that it's skeptical, that I don't believe it, it's digital. But when you can get it right inside your bank account and it's FDIC insured, it's going to change the minds of lots of people. All right, now we can see here, as I said, nearly 300 million checking accounts. They're going to take care of the links to lenders and everything else. All right, now, the thing that you have to understand is that it's not just a linear move, step by step. This is what's known, linear would be like this, step by step by step. No, this is what's known as an exponential move like this, all right? It's like gravity. Bitcoin is gravity sucking in the entire world's financial assets because it's growing at 200% a year. It's the hardest asset. When I say hard, meaning it cannot be inflated. No one can manipulate the supply of that. So it's sucking in everything. It's sucking in capital, but even more important than that, it's sucking in mind share. Now, what do I mean by that? Well, the CFO of the world's largest hedge fund, Bridgewater Capital, I made several videos. I talk about Ray Dalio all the time, ran the world's largest hedge fund, Bridgewater Capital. Well, their CFO just left. They just left to go join a Bitcoin company. And so you might think you're smart and you might think that this is a big joke or that it's this fake internet digital money, but the smartest people in the world that ran the largest investment fund in the world don't see it that way. They left their job to go work for a Bitcoin company. This is all just happening right now. Now, the boom is coming. It's already here, but it's coming. Again, I want to explain how this works a little bit. So looking at, remember, all technology cycles kind of work the same way. So we want to look at adoption cycles. And what happens is that each new technology builds on the previous technology cycle, so it comes faster and faster and faster. Let me give you an example. In the late 90s, I was pretty young, but I was trading these things called internet stocks. And there were these crazy things, nobody knew what it was, and it was these internet stocks. And at the time, my roommate quit his job and we were at home day trading these internet stocks. And at the time, we didn't have the internet. So there was no phone, there was no Robinhood on your phone or E-Trade app that you could trade stocks from. It's not how it was done. You had to call a broker to trade stock. And so the adoption was slow because of the internet was slow because of that. But today, everybody has a Robinhood app on their phone. And so now they can trade cryptocurrencies and stocks really fast. That's an example. But we can see this adoption curve. And you'll see this curve and you'll see this arc that repeats over and over and over and over again. And that's the S-curve that I'm talking about. And so the way it works is we kind of have this first 10%. This first 10% are the real early adopters, these people right here. And that's about where we're at. We don't know exactly, maybe we're in the 10 to 20, maybe we're in this range, 10 to 20% range. We're in this part of the adoption curve. So people see this, like this growth, and they think it's too late. But what they don't understand is how technology cycles work and S-curve adoption curves. And so this is where the majority of the growth comes from here, from this 10% to 90%. Now here's where it starts to be too late and it starts to level off. Like I said, we don't know exactly where it's at. It's somewhere in the 10 to 20% range right here, but we still have this whole thing. And we know this, why? Because of technology cycles of history. We can see the way these things roll out. I'll pull this chart up. This is Plan B. Now, I don't believe in any one of these indicators on their own. But I love it when all these indicators can come together and show us a picture. And so this is kind of the stock to flow ratio. And so far, Bitcoin has been holding within this pattern pretty well. And this sort of predicts where it could go. So we still have some big growth here, maybe a little consolidation, some big growth there. And so that is what's looking ahead. All right. Now, the simplest strategy, like I said, I'm going to get probably a ton of comments on this video. The simplest strategy is just buy and hold it. That's it. The investment strategy, and you're probably going to see a bunch of scammer comments down below asking you to send them a message on Telegram or WhatsApp, and they're going to give you some trading strategy. No, the trading strategy is just buy and hold. That's it. Buy it and you hold it. All right. If you would have done that, if that's all you would have done, you would have outperformed every single hedge fund, every single Wall Street trader. You would have outperformed everybody on Wall Street by just buying and holding Bitcoin. The other thing I'd advise you to do is stop chasing pumps. Stop chasing pumps. Everybody wants to know what the next Bitcoin is, what the next opportunity is. They see that Bitcoin's too expensive. Well, you can buy $5 worth of Bitcoin. You don't have to buy a whole one. Buy $10 worth of Bitcoin. And so everyone is trying to chase the next cheapest coin, the next thing, and they're chasing one pump after the next. The problem is a couple things. One, you're going to have to pay tax on all that. Two, even though you might find some that do outperform Bitcoin, most of them won't. So on the average, you're going to lose money. You're going to end up losing because of taxes. So let's say that Bitcoin's been going up at 200% a year annually, and let's say that it continues to do that. With the tax rates, say 50%, you would have to make an average of 400% just to break even after taxes. And you might find some that go up 6, 7, 800, 1,000%. You're also going to have a bunch that don't. You'd have to average 400% to just average out 200 of doing nothing but buying and holding. So which would you rather do? Would you rather waste all your time chasing pumps and end up losing or even? Or use that time more constructive to work on your business or your own skills? All right. So hold a Bitcoin. That's the advice at the end. This is the information that you need. Most people don't know this. Like I said, this feature will be available in banks later this year, and now's your time to front run the entire thing. Now, if you like this information, I write a newsletter twice a week on Bitcoin information. I call it the Asymmetric Edge. It's to give you the asymmetric information so you can take advantage of the asymmetric upside. So you can subscribe to that for free. I'll put a link down to it below. I write it twice a week. It's a free newsletter. The other thing is I started a nonprofit. We are going to change the world by giving people the ability to work and earn money in Bitcoin all over the world. 50% of the world lives on less than $5 per day, and they're not allowed to join the financial system. We're going to change that, and we are going to change it really fast. I'd love for you to just at least put your email in and keep up with what we're doing. Maybe you want to get involved at some point. I'm going to put the link to that down below as well. All right, as always, leave me questions on this video, comments on this video, but I'd like to hear your questions. If I grab your questions, I'll answer questions on my new channel called Market Disruptors. If I answer your question over there, I'm going to send you $25 in Bitcoin. All right, as always, give me a thumbs up on this video if you like it. If you don't like the video, then give me a thumbs down. But leave me a comment and at least tell me why, and we'll figure it out. All right, that's what I got for you today. To your success. I'm out.